Hello everyone and welcome to edupediaworld.com. In today's class we are going to discuss section 10 subsection 10C of the chapter income not forming part of total income, and this section is about voluntary retirement scheme, how this VRS is exempted from income tax and what are its tax implications. So let us see by starting today's class. VRS. What is the meaning of voluntary retirement scheme? VRS is a scheme under which an employee is allowed to voluntarily retire from his job before his retirement date. So, voluntary retirement scheme is a scheme in which an employee can voluntarily retire from his job before his retirement date. His retirement date has not come till yet, but he can retire before that under this scheme. Now, in order to avail the income tax benefit on VRS, the employee must satisfy these two conditions. If he satisfies these two conditions, then only the income tax benefit can be availed by him. If not, then the income tax benefit cannot be availed by him. What are the two conditions? Number one is the employee should have worked for the organization for a minimum of 10 years, and number two, he should be of 40 years of age or more. So, number one is that he should be with the organization for a minimum of 10 years. He should be working for that organization continuously for a period of 10 years. And number two, he should be at least 40 years of age or more to avail this VRS scheme. If the employee is not satisfying any of these two conditions and he is voluntarily retiring from his job, then he cannot avail the income tax benefit attached to this scheme. He can retire voluntarily, but voluntary retirement compensation which he would be receiving from the organization will not be eligible for the income tax benefit. So, in order to avail that income tax benefit, he has to satisfy these two conditions. Number one is that he should have worked for the organization for a minimum of 10 years and he should be 40 years of age or more. Next comes the calculation of the tax exemption on VRS. Following are the three conditions, the least of which is exempted from the income tax and the remaining will be taxable. So, the least of these three will be deducted and the remaining part of the VRS will be taxable. What are the conditions? The VRS is given tax exemption as per the following limits. The least of the following amongst these three is exempted from the income tax payment. Number one is last drawn salary into 3 into completed years of service. So, this is the formula. The last drawn salary, whatever will be the last drawn salary of the employee, into 3, it means 3 months salary. If we are multiplying 3 by the last drawn salary, it means we are getting 3 months salary into the completed years of service, or the last drawn salary into remaining months of service, whichever is higher. So in this first criteria, we have to take the higher of these two, either the last drawn salary into 3 into completed years of service or the last drawn salary into the remaining months of service. Whichever is higher will constitute this first criteria. Number 2 is the statutory limit of rupees 5 lakh, and number 3 is the actual compensation received. Whichever is the least amongst these three will be exempted VRS and the remaining will be taxable. Now, one important thing to note here is that salary for this purpose means basic pay plus DNS allowance. As we have done this in many more section 10 subsections, that what is the definition of salary as per each section. So according to this section, the definition of salary, or we can say salary, includes only basic pay and DA forming part of retirement benefits. So apart from these two, nothing else will be added to salary for the purpose of this calculations. Let us see once again what are the limits. The least of the following three. Number one is last drawn salary into 3 into completed years of service, or the last drawn salary into remaining months of services, whichever is higher. Number 2 is statutory limit of rupees 5 lakh, or number 3 actual compensation received. Now let us see one question to understand this concept more clearly. Mr. Datta received a voluntary retirement compensation of rupees 7 lakh after 30 years 4 months of service. He still has 6 years of service left. At the time of voluntary retirement, he was drawing basic salary of rupees 20,000 per month, dearness allowance which forms part of pay rupees 5,000 per month. Compute his taxable voluntary retirement compensation. So you have to keep note of all the figures. Number one is the voluntary retirement actually received, that is 7 lakh. Number two is the number of years of completed service. So here he has served for 30 years and 4 months. So the number of years of completed service will be taken as 30 years. Now the remaining years of service is 6 years, which will be converted into months by multiplying by 12. Now we have to take a look at the basic salary, that is 20,000 per month, and the dearness allowance which forms part of pay, that is 5,000. So the total salary which will be taken for the calculation of the limits will be 20,000 plus 5,000. Now let us see the solution, how the taxable voluntary retirement compensation will be calculated. The voluntary retirement compensation actually received is rupees 7 lakh less the exemption under section 10 subsection 10C, for which we have to see the note below, which has come up to rupees 5 lakh, and when we deduct this 5 lakh from rupees 7 lakh, we get the taxable voluntary retirement compensation, that is equivalent to rupees 2 lakhs. Now let us see how this exemption of rupees 5 lakh is calculated. The exemption to the extent of least of the following. Number one is compensation actually received, that is rupees 7 lakhs. Number two is the statutory limit of rupees 5 lakh. And number three was last drawn salary into 3 into completed years of services, or last drawn salary into remaining month of services, whichever is higher. So first of all, we take the first formula, last drawn salary, which includes basic pay plus dearness allowance, that is 20,000 plus 5,000 is equals to 25,000 into 3 into completed year of services, that is 30 years, which comes up to 22 lakh 50,000, or the last drawn salary into remaining months of services. Last drawn salary, as we know, includes basic pay plus dearness allowance, that is 20,000 plus 5,000 is equals to 25,000 into the remaining months of service. The remaining years of services were 6 years, which will be multiplied by 12 to get the remaining months of service. So we get the total amount as 25,000 into 6 into 12 is equals to rupees 18 lakh. Between these two, that is last drawn salary into 3 into completed years of service, or last drawn salary into remaining months of service, we take the higher. The higher is 22 lakh 50,000. But now we have to compare this 22 lakh 50,000 with the remaining two, and we have to take out the least. Now obviously we can see that the least is rupees 5 lakh, because 5 lakh is smaller than 7 lakh and 5 lakh is smaller than 22 lakh 50,000. So the exemption will be the least of these three, that is rupees 5 lakh. So this is how we got the exemption of rupees 5 lakh under section 10 subsection 10C. And when we deduct this exemption from the voluntary retirement compensation actually received, we get rupees 2 lakh as the taxable voluntary retirement compensation. So this is how the calculations are done. You have to just keep in mind the exemption. What are the conditions? 3 conditions are there, and in one condition there are 2 sub-conditions. In total, you have to remember 4 conditions. Number 1, compensation actually received. Number 2 is the statutory limit. Number 3 is the most important one, because these two are very easy to remember. You just have to apply your minds in remembering the third condition, and that is last drawn salary into 3 into completed years of service, or last drawn salary into remaining months of service. This is only the tricky part of this topic of VRS. Other than that, everything is very, very easy. So just remember this formula and you will be able to solve all the questions related to VRS. Thank you, students. Hope you have understood this topic of VRS, that is Voluntary Retirement Scheme. Now in the next class we'll cover some more incomes which do not form part of the total income.